Good evening and welcome to another of our SMAG masterclasses. And tonight we are talking all things finance, how to save, planning for retirement, the unexpected, and of course, how best to make your money work for you. Basically, as the cool kids say, how to secure the bag your way. Now, as we wrap up Heritage Month, we thought, what better way to end things off than talking about something we don't always actively think about, and that is financial heritage and the legacy that one can leave for their loved ones. To help us get the 411 and have us well on our way to better financial health, we have partnered with industry leaders Old Mutual, the Pan-African Investment, Savings, Insurance and Banking Group. So thank you to Old Mutual for helping us facilitate what is an important and really life-changing discussion that I'd say. Joining me tonight are three industry leaders in their own rights. We have the head of strategic retail marketing at Old Mutual, Priya Naicker, as well as the head of Old Mutual Rewards, Brett Cameron. And rounding off our panel is radio personality Zanele Potelwa. Hello, everyone.
Hello.
Hi. So first things first, before, because I don't know if this is a term that many people use or fully conceptualize or understand, but what or how would we define financial heritage or legacy? So Priya, I'm going to start with you. How can we actually define financial health, legacy?
Yeah, so when we think about a legacy, I think we typically think about the impact we'll leave beyond our lifespan. So what will the people around us feel? What will they remember? What's the lasting impact that we have? So when we talk about a financial legacy, it really is about what we leave behind financially for future generations, for our family, and for the people that depend on us. And I think it's quite important when we think of that in the context of intergenerational wealth transfer as well. So that would generally be what we would refer to as a financial legacy.
Yeah, intergenerational wealth. I love that because that's exactly what I think we're hoping to share with people tonight so that they are able to leave something for the people that come after them. So that's a fantastic word for the day. Now, before we go any further, I want to encourage all of you joining us to ask any question you might have in the live chat. And as you know, we love to reward our audience with cool competitions, and tonight is no different. All you have to do is comment or ask a question in the live chat, and you stand a chance to win 25,000 Old Mutual Rewards points. So, Zanele,
yes.
Before today, did you ever think about leaving a financial legacy?
So I'm going to be honest because I feel like this is a safe space, right? So
Yes.
I am one of 6 children. I'm number 5.
Okay.
And for me, I always looked to my older siblings to kind of be like, this is for you guys. You guys need to worry about those things, right? And I thought, I'm still the youngin', and, I would keep very close to them because one day, in the future, when we're like 100 and they're no longer going to be around, hopefully I get their stuff. But honestly and truly, I didn't necessarily think about it particularly before today. So I think it was recently where a friend of mine was speaking to me and telling me that, you need to be a little bit more financially savvy, especially thinking about things such as pension and all those other things that come with, I guess, our heritage when it comes to financial things, But I never ever thought what's going to happen in terms of my financials when I'm no longer around.
Yeah.
Who will my debt go to? Where will my assets go? And all of those different things. So that's why I'm very excited to hear from these two individuals how exactly I can do that.
Yeah, and I think some of the considerations that you're making are obviously things that you probably didn't have to think about before the pandemic, because the pandemic has really changed the way in which we approach our lives. And as scary as the thought is, one of the things we've really had to engage is sadly the idea of illness and death and how it can affect anybody, regardless of age, health, or whatever other things that could come up. So it's also highlighted the importance of good financial planning and having a plan in place for life's what ifs. So before we continue, because I will definitely, I'm looking forward to picking your brains, but before we continue, let's take a quick look at Kim Gillett's moving story.
I am Kim Gillett, and this is my story. I was diagnosed with breast cancer at the age of 32 without having any family history at all. I found a lump after bumping myself in the shower, ignored it as most women do because we don't want to be inconvenienced by these things, and went off to a doctor a week and a half later for food poisoning after eating a chicken burger with my friend. and had blood tests done and asked for a by-the-way breast exam, which was done, and the doctor didn't feel what I was feeling. So I insisted on a mammogram, and the results showed that an abnormality was present and that I would need to do a biopsy, and then was diagnosed with breast cancer on the 24th of February 2017. Straight after my lumpectomy, where you get your proper diagnosis, I submitted all my paperwork, and I got diagnosed February, so it took about almost 2 months. So by the end of May of 2017, I got paid out my severe illness benefits, which was a huge godsend. It really helped in so many different ways. It takes the financial burden off of you when you're going through something so real. And people would think that, you may have cancer and that's your focus, but there's always a lot of admin that comes with this, doctor's bills, it's blood tests, there's a lot of claims that need to be processed as well. And if you don't have somebody to do it for you or manage it for you, it falls a lot on you, and it can become stressful and overwhelming at times also. My financial advisor is actually based in Cape Town. I have a telephonic advisor, but I have access to financial advisors all the time. Each of them gave me really good advice in investing and how to grow that money to sustain myself. My financial advisor, I think at many times, could be my best friend. I always tell everybody that I speak to, insurance is so important. We take for granted that tomorrow is promised to us. Tomorrow is not promised to anybody. If you have the means to do it, go ahead and make that sacrifice and take that policy out, because we all live a very high-paced, stressful lifestyle at the moment. Everybody's got a journey in life. It may not be cancer, it may be something else. So my friend and my uncle that passed away, they told me to live my purpose. So to further the significance of them passing, there's a semicolon here, which means my story's not over, and the 2 arrowheads are for the 2 of them. So I did this just after they passed, because I need to keep pushing forward. See, I don't like to cry. Life is short, really short. It's so... Cancer is, it's the demon that I love to fight. I'm gonna keep fighting it.
Wow. Thank you, Kim, for sharing that story with us. I think a very important story, because as you can see, you can't plan for, the unexpected. So thank you again, Kim, for that. Now, Brett, earlier Priya spoke about financial well-being. But what exactly is financial well-being, and why is it so important?
Priya talked about families and legacy for your family, but I think it's also a very individual type concept. And I think about it probably in two dimensions. One is a sort of a security versus freedom. You want to be financially secure, but you also want to give yourself freedom to do the things you want to do financially. And then it's also about the time. It's about the here and now. You want to be secure today. You want to know that you're going to be able to buy your groceries at the end of the month, pay off your debt, not be drowning in debt. But also about thinking about the future. If the unexpected happens down the line, that you're protected and you've got the protection in place. Or thinking about the dreams that you have, and are you saving so that you can realize your dreams? Whether it's a fantastic retirement or buying the house of your dreams, or even just a holiday. I think those are the dimensions you need to think about.
Yeah. And I think, again, to go back to the pandemic, I think what's been positive in some ways is that it's really forced a lot of us to relook the way that we live our lives, Again, younger people tend to not really think about financial well-being, because we always thought, well, that's something I have to worry about, retirement, etc. So that's something that I would definitely say has been positive in terms of really relooking how we, maneuver our way through life. Now, Zanele, as a millennial,
Yes.
do you have a financial plan in place?
So I'm going to be honest once again. I think I have half a financial plan. Is that good enough? Perhaps we're getting there, I think. Exactly, it's a start. So genuinely, I think just in terms of understanding where my money needs to go month by month, the things I need to pay off, where I need to be saving and everything, that's where I would say I have half a financial plan. But I think the rest of it, I still need to somewhat figure it out in terms of looking at, my wealth in the future and the different things that need to come into play, right? And also just just touching on what you just said with the millennials and us as young people thinking that these things are only for much later. You know, even when I was looking into things like, how am I going to handle my finances? I started talking about it with some of my friends. And so many of us, we don't look at that. We're just like, we want to live the soft life. Like you guys said, we want freedom. And we want to be able to have that freedom without money particularly.
Exactly.
So I definitely think that I do know the importance of it, but I'm halfway to being there of being like, I 100% have a financial plan.
Okay. Well, I think halfway is probably better than a lot of people. So you're actually doing really well. But luckily, we have these guys here with us.
Yes.
So Priya, I want to dive a little bit deeper. How can one go about, you know, doing a financial plan? And, you know, it's something that can be quite daunting for a lot of people. So whilst we have you here, how can one go about doing that?
Yeah, so I think the first thing to realize is that we shouldn't be intimidated by this terminology of a financial plan. It really is, a financial plan really is about building a life plan and building and setting yourself up for success in life. So when you think about a financial plan, it's really about saying, as Brett was talking about, how do I manage what I have right now, the income and the resources that I have right now, to balance and be able to find ways of paying for my expenses, etc., but also plan for the dreams and the goals that I have for the future in a way that doesn't deprive me, as Anele was saying. You know, we sometimes feel like it's a deprivation mindset, but in a way that says, I want to live the best possible life that I can live right now, whilst also allocating resources for my dreams of the future.
Yeah, I actually love that. A lot of us do feel like it's a deprivation plan as opposed to actually being a positive plan. You know, you think about financial planning, then you think, oh, the things I have to cut out, now I can't do this. Whereas I think what I'm getting from you guys is that actually, once you go that route, it allows you to be able to do the things that you love. So I actually like that. So
Yeah.
remember that when you're working on your other 50%.
And you're also very right, just in terms of like how it is a little bit daunting, and even the fact that, you know, we don't necessarily always see it the right way. So I know that for me, on my radio show, we've been chatting to some people in terms of how we can maybe start investing, and they're like, you need to put away money for 3 years, and I'm like, guys, in 3 years I can buy so many clothes, I can go to so many
Exactly.
places.
Yeah.
Like, so you're 100% correct about that.
Yeah, no.
So I
Yes.
wonder if I can just quickly add,
Of
it
course.
also helps you to prioritize. So we're so used to hearing that we're not meant to buy a car because it's a depreciating asset, or you're not meant to buy clothes because it's frivolous spending. But when you develop a financial plan, you understand your relationship with what's important to you. So if clothes is really important to you, by all means buy the clothes, but then sacrifice on the things that are not important to you.
Yes.
and make sure you allocate those savings towards things, towards saving for your future. I'd like to give a quick example, a
Sure.
personal example. So I mentioned earlier that I moved to Gauteng a few months before lockdown. I sold my car thinking that I wouldn't cart my car up to Gauteng from Cape Town, and I'll just buy a car when I get here. And then lockdown happened, and I haven't bought a car, and it's been now almost 2 years. And I realized that a car is really not important to me. It is very low on my priority list.
Sure.
Interestingly enough, though, for me it's really important that if I want to have a nice dinner, I must be able to splurge at a good restaurant.
Yeah.
I'm
So
exactly.
my value system is very much aligned to spending at restaurants, but really not worrying about car or those type
Yeah.
of things. And you know then where you can pull money from and where you can allocate money to.
Yeah, and I love the example that you gave, because I will pay a lot for like a fine dining experience,
Yeah.
but then there's other things where I'm just like, whatever. And I think that's probably part of why sometimes a financial plan can feel overwhelming, because it's such a specific thing, and then you speak to someone else and they tell you something else, and you think, oh, then I must be doing it wrong. But actually, ultimately, it's a very personal experience.
Yes.
Correct.
Right. As is retirement and the plans that you choose to make. But the Savings and Investment Monitor 2019 results reveal that more than 40% of South Africans have no formal retirement savings, which is quite scary if you think about what that means for many people's futures and the possible strain it means for your loved ones. So, Brett, if I can come back to you, what are the things we need to consider when planning for the future, specifically when it comes to obviously our finances? Because I think retirement is a big thing for a lot of people. We've heard some scary stories, people losing money. So what can you share with us with regards to that?
To me, it's those two dimensions of savings as well as protection. So make sure you're protected from health incidents, from car accidents, from deaths in the family, all those like life events or personal events that could really set you back from reaching your goals and your dreams. And then the other aspect of it is thinking about the savings. What are the different things that you want to save for? Being clear on those priorities and making sure you can set the right amounts of money aside to reach those goals.
And I mean, when it comes to retirement, if you don't have enough, do you just carry on working, or do you just hope for the best, or you gotta remanage that plan? How does that, I don't know if you can share some insight with that.
Yeah, I think retirement, sure, there's so many aspects to it, and different people will have different plans. Some will have businesses that they can continue with into old age. Others rely on their families. But yeah, setting aside some money and making sure that you're not necessarily dependent on others gives you that extra security. And if you can afford to do that, it's really important to make it a priority.
True.
So far in the future, it might be difficult to prioritize it, but to have
Shem,
a good,
I'm
good
putting you
future
on the spot
retirement, I think
here
it's a good thing to prioritize.
I'm just excited that we've got, because getting a financial planner is something that people want to do, but sometimes, again, the whole daunting thing, you hear finance and it becomes a thing. So for people who are watching or have joined us today, obviously it's great. We've got people we can chat to, and I imagine afterwards, if they want to have the conversation, they would probably have to look at a financial plan. Do you have a financial planner?
So I always say this, and I always joke about it, the fact that when I was in high school, I always wanted to be a doctor, but my marks didn't really want to be a doctor. So then, we go and we do different things, right? Where I was going to go this whole different route to get to the medicine, but then radio found me. So I think I've always felt like I was making my way along. So even me deciding to be a radio presenter, I only decided at the age of 21, right? So I think...
I love you say only.
it really is. All of my peers knew
21
from
is
like...
still young.
We all are young, but I'm saying all of my peers from like the age of 5, they knew they wanted to do this, right? So I 100% have always been like, you know what? For me, I'm still figuring things out. But I think that only recently, where a friend of mine told me that, Zanele, that's not an excuse. You can't not have a financial planner. So I think it was around about 2-3 months ago when she started speaking to me, and we then started a little bit of a relationship. And I'm so glad that we're talking about things such as retirement, because there's so much that I didn't know in terms of, even the taxation that comes with the different things, such as pension and whatnot, and I think my eyes have been opened so much, even to the point of that all of my peers, or rather a big majority of my peers, don't know that you need to have a financial planner. So I can proudly say I do have a financial planner.
Well, good on you, girl.
And we're working on that financial plan.
Okay. Well done. Now, Priya, am I correct in saying that, I know obviously you have a different designation now because you're high up, but you're a financial planner or qualified. Is that...
So I don't practice as a financial planner.
Yes.
I have the certified financial planner qualification. Yes.
Like, look at you being humble. You've got a certified qualification. So maybe you can tell us, what value does a financial planner offer?
When you look at your personal finances, there are a number of different aspects. So I think there are the obvious things that are very much under your direct control. Things like how much you earn, how much you spend, where you allocate your money, etc. And then there are the things that you need to protect, some of what Brett mentioned earlier on. So protecting what you have, your ability to work, your life, your assets, and then building for the future. But there are other pieces that are not directly under your control. So things like how your salary is structured with the input of your employer, the choices of pension fund that you may have to join, medical aid, the different options that are available to you. And those things are slightly broader than being under your direct control. And then there's what we would call the macro elements. So things like the interest rate, the economic environment, and all of those things that happen to us very often and we don't control. A financial advisor takes all of those things and makes it relevant and personal to you. So based on what you'd like to achieve in life, how you protect yourself and how you plan for your dreams of the future, and how you engage with all of those micro and macro elements to create something that's doable. That's the value that a financial advisor adds. In addition to that, they serve as a coach. So it's not that an advisor comes in with all of the answers. A good advisor will actually tap into your dreams, your hopes, and what you want to achieve, help you stay accountable, and help you stay on track to achieving your goals as you go along.
Yeah, thank you for that. And this might be a silly question, but is there a difference between financial planner, financial advisor? Is it interchangeable? Just because sometimes we say, financial planner. Is there like a technical difference there, or it's just semantics?
It's largely interchangeable, but every financial advisor or financial planner has to be a registered financial advisor or financial planner, and you can actually go to look to see that they are accredited and registered.
Yes, because I was going to ask, how do you know if someone comes to you and they say,
yeah.
I can help you, yes.
Yeah, a lot of our friends claim to be financial planners very often in our lives, but no,
Yeah, exactly.
that's not always the case. So you can actually look at the regulatory body website and check that your advisor is registered.
okay.
Amazing.
Thank you for that, because, I think otherwise, a lot of people would be getting proper scammed.
Yeah.
Now, what I love is that as the world has changed and we have more access to technology, there's so many other avenues, especially apps, which can help literally within arm's reach. And as scary as it can be to see exactly how much you are spending, how you're spending your money, I have found that it really does drive the point home that every penny counts. And I have to be honest, when you do see where your money is going, sometimes it hurts. You're like, what? This month?
Literally.
I ate what? How many times did I? But it is a necessary evil, because it, like you were saying earlier, having that knowledge is actually empowering. It doesn't have to feel like sacrifice. It's something that can help us to better plan for our futures. Speaking of apps, do you have a budgeting app?
So I do not. And I feel like I do want to look into getting one, because I was doing my taxes, right? Tax season. And I was looking back over my banking records, because that's how I somewhat, and my own budgeting app, where I sort of look back and be like, what's going on with my finances? And just to touch on what you just said, I literally saw an amount in December where I was like, wait, what happened here? And who let me spend this money? Yeah. So it was really, really difficult to see it. But at the same time, I think that that's the way in which I try and keep myself a little bit in check, where I go through my records each and every month, where I'm like, this is where this is going, this is where this is going. And we need to go up here and down here and all of these different things in terms of our savings and how we're spending and whatnot.
And in terms of keeping an eye out, okay, you say you do it when it's tax season, for example. Is there a recommended, should we be doing it monthly, weekly, or is that quite personal as well? I don't know if, or it's just whenever you're up to it and brave enough.
I guess I'm similar. And also, like an annual review is a good way to think about it.
Yeah.
But as long as you're aware of your monthly spending, or even week to week for some people, I guess you need to know.
And sometimes you're not aware. The one time, I remember I called my bank and I was like, guys, there's something going on here. And I was like, there's just so many amounts that have gone off. And they were like, sorry, ma'am, did you go here? I was like, yes, I did. And what about here? I was like, there as well? They were like, and there? I was like, yeah. They were like, that was all you. I thought it was fraud, but it 100% wasn't. So I think you're very right in terms of saying sometimes you need to even do it more than just once a year.
Yeah, a year will be too long. You'll forget all those events.
Exactly.
So when I was trying to be responsible, I decided to download an app so that I could monitor my my spend. And that's why I'm saying I know the feeling of seeing every penny, because I was like, what is this? So the app that I found really easy to use is 22/7, but it was actually only when we were preparing for tonight that I realized it was an old mutual initiative. So I was like, oh, look at that. So since we have the experts here, Brett, can you tell us a bit more about it? Because it's not everyone obviously who has it, I know, but you can maybe enlighten the people who've joined us tonight.
Yeah, I use 22/7 a lot. I think it's fantastic. And what I like about it is it makes the practice of budgeting automatic. It connects to all your bank account transactions and pulls all the data into one place. It automatically puts your spending into different categories. You know how much you're spending on coffee or eating out or traveling. And
Trust me,
it's so easy. And then you don't have to add up numbers on a piece of paper or on a spreadsheet. You just get the nice picture of where your money's going every month coming from that. And having it automatic, I think, just makes it so much easier to do and make it top of mind. So,
Yeah. Do you have a budgeting app, just out of interest?
Yeah, so I use 22/7, and I will be honest, I'll say something I'm probably not supposed to say, but
Uh-oh.
I really never liked the idea of budgeting. So, I mean, I did it when I had to, more so if I was buying a property or something big in my life. And this is years ago. And then I started using 22/7 a few years ago because it is part of the Old Mutual stable, and I needed to test it and play with it. And as I started using it and telling other people about it, they were like, no, let me tell you about it, because they'd been using it for a longer time. And I always say that people, when you meet a 22/7 user, it's very seldom that you meet an ex-user, because once they're on it, they're sort of hooked on it. But what I have found for somebody like me, if anybody else in the audience resonates with not liking budgeting, is the more you can make rules that you don't have to look at again or don't have to look at for a long time, the easier it is. So as an example, because I love food so much, and my restaurant and Uber Eats bills can get out of control. So I kind of put a peg on what I want to spend monthly, and sometimes I go over, sometimes I go a little under, but the fact that I don't have to think about it and check every month makes life easier for me. So I do find if you're not someone that loves budgeting, make a couple of rules that you want to stick to, and then just don't think about it. Just kind of check it every now and then, but let it help guide your behavior.
So, like, what kind of rules would those be?
So the one for me is exactly what I mentioned, where I said I'm only spending X amount of money on food for the month, because that going out can be a little uncontrollable for me.
Just a little.
Yeah.
So when I see myself approaching that number, then I kind of go, okay, I'm going to have to make something for dinner tonight.
Okay,
I can't
so
order,
on your app then, or wherever
Correct.
you're monitoring your spend.
Correct.
Okay, because I thought there was like a magic pill that you're talking about, where you just like, I hope to save this much this year, and then you just put your little list away.
Well, you can actually set certain goals in 22/7, so it's a magic pill of sorts.
Okay, we love a magic pill. Now, earlier I spoke about how every penny counts, and the importance of making money work for you, right? Brett, as the head of Old Mutual's Rewards, can you tell us a little bit about that? Because I imagine that's one way that we can make our, what do you say, bang for your buck? What's the phrase?
Yes, bang for your buck.
Yes.
Thank you. Yeah, English was running away there.
Okay, you caught it.
But Priya found
yeah,
it.
you
Thank
always
you.
want that bit of extra money back. And,
Yeah, for sure, exactly.
Yeah.
the rewards are great. And I get so excited talking about it, because it actually brings that energy, that freedom into excitement into what we do in sort of financial services. And our Mutual Rewards program is focused on financial well-being. It's, I guess, a financial wellness program of a sense. It not just rewards you from being a customer of Old Mutual and for meeting your financial needs and putting the solutions in place, but also for doing the right things from a financial wellness point of view. So we reward you for using 22/7 and budgeting on 22/7. So every transaction you look at, we'll give you a few points. We also give you points for learning about your finances. We've got some really great financial education tools. We help you get a bit of insight into your financial position through some assessments, some tools that we make available for you, giving you some insight about your finances. And every step along that journey, we reward you a little bit more.
So does someone have to be an Old Mutual member to have these benefits, or how does it work?
No, so we decided that, the Old Mutual customers, not just the customers who have bought policies from us before, but actually anybody who might do it in the future. And anybody in South Africa can join Old Mutual Rewards, and they can engage with these financial wellness tools. And we'll also give you Old Mutual Rewards points for doing that. So yeah, everybody can join, and hopefully it starts you on that journey.
We all get a point. We're all getting a point.
Everybody.
So
Yes,
are
the
you
magic
telling
pill.
me that the more transactions you have, the more points you get?
So the more budgeting activities you do, the more points you'll get, or
Perfect.
the more you'll
That
learn
was an
about your
important
finances,
question.
the more you'll get.
Thank you, girl. That was an important question.
Yes.
Because
I need to download the app.
We're not encouraging you to spend.
Yeah, I was gonna say, you
like
guys-
the other banks do. Yeah.
you're definitely encouraging good behavior. So how does someone join?
So it's all online.
Yeah.
It's a very digital program, very interactive. And you join on our website, oldmutual.co.za /rewards. sign up there. The website tells you all about the program and how it works.
Okay.
And it's really easy to use. Do it on your phone, on a computer, whatever's easiest for you.
Brilliant. So we love rewards, and if you have just joined us tonight, remember to keep sending through your questions and comments to stand a chance to win 25,000 old mutual rewards points. As Brett has told us, there's lots of benefits to having them. Now, another thing we all tend to shy away from when it comes to discussions, it's around mortality and the W word, a will. So, Priya, when should we start considering drawing up a will? Because that is definitely something that I think is uncomfortable for a lot of people. But obviously, with the world changing the way that it has, a will's become more, well, not more important, but you know what I'm saying. It's something that needs to be top of mind for a lot more people. So how do we go about, or when should we start considering one?
Yeah, I think typically you would be triggered to consider a will when you've started gathering assets. So most common would be property, or what the lawyers call deemed property. So once you've got assets, you should be looking at creating a will. But what's also important is that once you have a will, you should regularly update the will when there are major life events. So things like when if unfortunately you're experiencing a divorce, or good events like, the birth of another child, those usually trigger the need to review your will, and maybe make it an annual or at least every second year practice to sit down with your advisor and just work through the will as well.
When you started, you said something about deemed property. What does that mean?
So there are legal technical explanations around what's considered actual property, so the physical tangible property, and then the law considers a few things that are not tangible necessarily, but they're also considered property, which you should bequeath to someone in a will.
Okay, so deemed property would then be the things that are legally considered
property.
Gotcha.
Correct.
Since you are a sample size today for everyone who's young and maybe less responsible around finance,
Yes.
is a will something you've thought about? Do you have deemed property?
I do not. However,
Is a car deemed property? Sorry to interrupt you. Is a
course.
car deemed property? Is that something?
It usually would be. It would be a part of your estate.
There we go.
So I think it was a few weeks back where I saw it was National Will Month or something like that, not too long ago. Yeah. And I
Okay.
looked at it and I was like, oh my goodness, I have never considered this. And I think you keep saying this, where you say that, the world has really changed because of the pandemic. And I think that it's made a lot of us think about things like that. Even us, I'm 27 years old, and I never ever looked at a will because I was like, I don't think I need to, I'm sure I've got more years on this earth, but we've been shown just how short life is, how unexpected it can also be. So I think literally only a few weeks ago did I ever think, should I possibly have a will? Otherwise, before that, it wasn't even a thought.
And are you going to get one?
I'm
done?
working on it.
Yeah,
Working
because I
on
think
it.
a will, when I was thinking about tonight and, what we're going to discuss, I realized that it's actually also an investment, in a way, because it's an investment in yourself in terms of your wishes, and also an investment for your family, because should you pass away, your family, you don't want to leave them in a position where maybe then the state has to deal with that. So that's definitely something that I think, again, just changing the mindset, as you were saying, around financial wellness, changing the mindset. A will doesn't have to be this, dire thing. You can actually look at it almost as an investment in yourself and your family. Yeah. Speaking of investment, Priya, when should we start considering having an investment portfolio? Because that's a question I think a lot of people have. Do I do it the day I start working? Do I give myself a little bit of a gap here where I just blow my salary and then I start? So when exactly should you actually be?
Yeah, again, I think I'm a big proponent of just taking the sting out of those words. They can sound very complicated sometimes, an investment portfolio. And I think there are two ways that people usually think about savings and investment. So you typically save when you're looking to achieve a particular goal. So if it's a travel goal or a deposit for a house, and you're saving that money to be used in application of that goal. So that's typically what savings would be for, or for unexpected expenses as well. When we talk investment and investment portfolio, it's talking about putting money away that will do some work for you. So it will start working for you, and you're not really planning on using it to satisfy a goal generally. And I don't think we need to wait for big amounts. So often people think we need to have lots of money, lots of lump sums available or big amounts that you can save on a monthly basis. The biggest piece of advice I will give people is start soon and start as small as you need to, but get the habit going. So even if you need to put a small amount away every month that you can afford, that you're not expecting to use for anything other than it working for you, start as soon as you can. And I mean, just to talk about what Brett mentioned earlier, if you're a member of the rewards program, you actually get rewarded for taking steps like that as well.
Now, one thing you've been is quite honest about some of your shortcomings in terms of takeout and some mistakes you make around your budgeting. But people also obviously make investment mistakes. What's the biggest investment mistake you've made?
Oh, there's so many. Okay. So I think one of them that I can genuinely think of is I remember when Bitcoin was very much just people were like, it's a huge thing now. Elon Musk said, so it must be right. So we were all like, let's go buy some Bitcoin. And I think for all of my mistakes, when I look at them, it was not doing my due diligence. So even with the Bitcoin, I was like, how fast can I just throw a couple of thousands at some Bitcoin? And then even, for example, when it came to some of my savings, I think it was around about 2 years ago, where I had saved all this money, and I was like, it's looking healthy, so it means I must spend it, right? So for me, I think that was one of my biggest, where at the end of a year, I'd come to, I guess, where we were now in December, January, and we were all chilling, and I saw this money, and I was like, it's for me to go and have some fun, instead of actually looking at the different avenues in which I can make it work for me, like Brent was talking about, and make it even more for us to be able to enjoy a little bit later. So yeah, I'd say it was that.
It is a trap, and especially when you're still younger, you think, well, I can make this back. Maybe if I just take a little bit, I've still got this. You know what I'm saying?
Haven't you heard the proverb? If you spend it, it's going to come back.
I don't think it works that way, but I hear you. And Priya, your biggest investment mistake that you've made?
So if you thought I was honest before, just hold on to your seat.
It's going to be good.
So I think there are two big mistakes I made, a series of them, but when I was early on in my career. And the one was, I had this weird idea that savings accounts were very cheap and check accounts were very expensive when I started work. And so it was a few years into my career, and one day I went into the bank, and the lady at the inquiries desk said, did you know you're spending about 600 Rand a month in bank fees?
Yo.
And of course, being the person I was who didn't like budgeting or looking at my bank statement then, I realized I didn't know that. And she said, if you change to a certain account, you could save X amount of money. And I did that. And what I realized was the massive impact that has, because I was then saving about 400 of that 600 thereafter and putting that into my retirement savings. I did do something right. And that makes huge amount of difference over the years in your working life. So that's the one. And I want to quickly share the other one, because I think a lot of people will relate to it. For the first few years of also my working career, I paid everything late. I overspent. I had store accounts, I had credit cards, I overspent on everything. I had very polar opposite money archetypes in my parents. My dad was exactly the kind of behavior I was emulating. My mom was the frugal, I'll make money stretch as far as it can. And I then just, did all these weird things. And somewhere along the line, it hit me that my financial reputation matters, and it's going to matter for many, many years to come. And if I leave behind this reputation with every credit card provider and store account owner, I was actually building up reputational debt, if you want to call it that.
Yeah.
So the penny dropped, but for a few years, I actually, it didn't dawn on me that it was important. And I do sometimes regret that, but I think it's made for good structure for the rest of my life, and I've been really disciplined since then about that.
I'm going to come back to you just now, because you've raised something, financial reputation, you said, which is something that I want to talk about, credit scores. But since we're all friends now, Brett, we can't leave you out of this mistakes discussion. What is the biggest investment mistake you've made?
Yeah, I think for me, it's not always speaking to a financial planner when making big financial decisions. And I'm somebody who knows about finances. I work for a mutual. I work in the industry. It's quite easy for me to kind of convince myself I know what I'm doing. But there have been some big financial decisions where I think I could have done a whole lot better if I had consulted with a financial planner before making them. And they would have helped me make the decision at the right time, structure it better, maybe even make a different decision. But I think the importance of not having a financial plan has been highlighted to me quite a few times in the decisions I've made.
Can I speak to what Brent just mentioned now?
Yeah, sure.
I think it was when I started working a few years back, 3-4 years, and I was deciding that I was going to spend my money like this and like that. And I was thinking now, if I had had a financial planner, it would have been so much better. So one of the things I can think of right off the top of my head is I decided I was going to invest in my summer body. And I went and I signed up for the gym. And they got me so good because it was a whole thing of you only pay 90 Rand for the first 3 months, and then after that you'll start paying the full thing. I signed up for a good 24 months. I think I was paying close to 1,000 Rand a month. I never stepped 1 foot in that gym. Had I spoken to a financial planner who knew me, who had taken the time to understand me as Zanele, I think it might have been a very different thing in terms of me spending all of that money for absolutely nothing.
Those contracts can be bad.
Exactly.
Well, and also the other thing that's a trap is when you sign up for those trials and then there's like put in your details, but you don't have to pay, and then you forget, and the next thing you know, you look and you're like, why do I have this random amount that keeps coming off? So there's always those little things.
Yes.
Now, coming back to what you mentioned about financial reputation, I love that because obviously a bad decision or bad decisions can affect your financial standing or credit score. But for people who don't fully understand what that means, firstly, what is a credit score and how that can impact their life, can you shed some light maybe on that for us?
Yeah, so typically the people that are looking at your credit score are people that you are asking for money. So you're going to ask for loans, sometimes for really big amounts, for things like a home loan or vehicle finance. For entrepreneurs, it can be business finance. And the organization on the other side of that and the person assessing it doesn't know you as a person and can't trust your...
Can't smell sweetly.
Correct, your inclination. So what they're looking at is what can they see to assess your reliability, your consistency, and your ability to meet the obligations that you're asking to take out with them. And so the reputational piece we spoke about is quite important because the way that they assess your reputation is, are you paying consistently? Are you paying the amounts that are due? Are you reliable in your behavior, in your financial behavior? Now, typically with small business owners, we find that they often have big amounts of money, maybe in a month or two, based on the business cycle. And maybe when things slow down, they have smaller amounts. Freelancers, experience the same. But when a credit provider is looking at you, they want to see that you're reliable and consistent. So the one thing I usually say to freelancers and gig economy workers and small business owners is make sure you're at least committing to the minimum amounts on a regular and consistent basis. Make sure that the other person who doesn't know you and is assessing you has enough consistent information that tells a story about your reliability.
And if you fall off the wayside, and you get blacklisted because of a poor score, is it something you can come back from? Or if you get blacklisted, that's it, your future's gone. No more trips, no more Uber Eats.
So I do think, having a situation where you're blacklisted, where there's a judgment, those are extreme situations. They're not situations that you can't come back from, but it is harder work to come out of that. Even moving into a debt counseling type of scenario, there is work to come out of that. So those are not small things. And that's why I think it's very important to take preventative measures, making sure that you are consistent and being proactive, not sticking your head in the sand if you can't be. So be proactive if you feel like you're going to have to fall short. Most institutions are very forgiving if you can make arrangements with them beforehand. But if you don't, it doesn't look good in terms of your reputation and your reliability.
Okay. So essentially you're saying it's actually better to just be upfront if you realize that you're going to fall into hard times, as opposed to maybe then, not paying.
Absolutely.
So, okay. I think that's important because I think it's the same with illness, and this is a bit of a too, but it's the same with illness. A lot of people will have something wrong, but they'd rather just ignore it and just be like, well, if it falls off, then I'll really, then I'll
Yeah.
attend to it. But I think what you're essentially saying is when you start getting that, pain or ailment or symptom, rather go be more upfront because it's going to save you in the long run,
Correct.
in essence.
Correct.
Britta, what advice would you give to our audience so that they can improve their financial standing if they are in a position where they are maybe going through hard times?
I think what we've been talking about, there's some really good truths in there. So, and I want to talk about credit reports a bit more because it's so easy to ignore it, or maybe even scared of kind of what the picture shows. But go get your credit report, see what it says, and it'll give you really, really interesting insights about where your debt is and how you should actually think about managing your debt differently. And something we offer through our mutual rewards program is a free
'cause I
credit
was going
report.
to ask,
We give
so-
you points again for getting a credit report. So we encourage you. So it doesn't have to be something you're ignoring or fearful of. But getting that insight kind of lets you understand your position, where you're at. And then once you understand that, you can start doing something about it. And so I think that's a really good place to start, is actually just get the insight and overcome that fear or ambivalence around tackling these matters.
Yeah, better to know than not. It's not good to
Absolutely.
be an ostrich in this particular instance when it comes to finances. Zanele, what are some of your own key principles of managing your personal finances?
So I think one of them, and I know
Other
that
than buying clothes.
other than you see, you know me very well. So I think one of them that I've had to teach myself is to sort of not live beyond my means. And I think it became very, very apparent to me around about like a year and a half ago. And more than anything else, it's to also make sure that you're not just, splurging just very, freely, as if there's nothing that needs to be taken care of. Because I think once you start working and you have that financial freedom, it almost makes you a happy, clappy person who wants to do the most. But it's definitely making sure that I'm living within what I can do, and particularly making sure that I'm also 100% doing the savings. And also, even with medical aid, I only recently got it, yes, as a 27-year-old. So I think those things have been very, very important to me on my list, where I'm making sure that I am 100% settled for all of the financial things I need to be right for. And I think also another one that I always really look at for me is to make sure that I'm keeping my savings away from the rest of my money, because it's so easy to dip into your savings, especially when it's just, it's right there. It's always very inviting. So I think that's something that I've definitely had to teach myself, where the savings stays savings and the money that I've put for myself for the month is there.
So what is better, long-term or short-term? Let's say you can't do both, right, theoretically. What is better? Should you rather put your money away where you can't easily access it, or should you have it so that if something happens, you can access it?
So I think in phrasing the question, you're sort of alluding to the fact that most times we want the quick answer of which one's better. The truth, though, is that they do very different things. So short-term savings are meant to be liquid, accessible. Things that, if the fridge needs to be replaced, or you have a gap in your medical aid and you need to fund some medical expenses, you can pull that out. Longer term is meant to work harder for you. So it's meant to actually build and grow and not be easily accessible. It's meant to be able to, to do its work for you. And so I think what's really great is that you can start both short and long-term savings with relatively small amounts. So I do think it's quite doable, especially if you get a hold of where you're spending your money and where you can save.
So essentially you're saying you have to do both.
I'm saying you'd enjoy doing both.
Oh, look at you, look at you. Okay, now, should the unthinkable happen, something else that maybe people don't think about is the kind of cover that can be offered. So what are some of the covers that people should look at in case something happens?
So this, I think, is one of those rules I spoke about earlier, about putting a few rules in place that, especially around things that you don't want to think about very often. Typically what we don't want to think about, but is quite important, is when you have dependents or loved ones that rely on your income. If you were to die, so if you were to pass away and you were no longer here to provide that income, or if you were disabled and that compromised your ability to work, so how would you fund your lifestyle? So those are two very, very important things to consider when we talk about safeguarding and protecting yourself against unexpected events and sometimes expected events. But there are other things like a severe illness. So typically, your medical aid funds the direct medical costs and maybe gap cover as well. But there are many indirect costs associated with a severe illness. And those costs need to be funded out of your own savings, which can be huge. And if you spend a little bit of money on having severe illness cover, you then don't need to worry about that. Now, what's great about those things is if you put that in place, you don't need to think about it very often. You don't need to visit it on a monthly basis. You can have your annual review or review every so often with your financial advisor and look at how it's working for you. Do you need to up or down those amounts? But you can just bed them down and let them work for you, or let them be your foundation if something does happen, hopefully not.
Okay, so obviously, as you know, we've got some people that have joined us tonight, and we've got some questions from the audience. So the first one I'd like to ask is, how much of one's income should go towards savings? I think that's an important question because I think a lot of people do want to know, you know, how much of our income should actually be going towards savings. Is there a number?
Yeah, so it's a very, very common question. And again, it's a little bit like how long is a piece of string? But the thing that I encourage people to do is to start with whatever is affordable right now to put into savings, so whatever is disposable right now. But the best thing they can do is sit down with a financial advisor, have a look at where their money is going, their priorities, and then map out where they can start releasing some of that savings. So there isn't a magic number. Like Zanele mentioned, you of course need to look at living within your means, look at prioritizing and saving, where you can find the savings, and then try to channel that. What Brett spoke about earlier on was also really important. There are great calculators that you can use and even get rewarded for, but that can tell you how much you would need to spend if you have certain goals, or how much you'd need to save, if you're looking at retirement or you have certain specific goals, it'll tell you exactly what you need to save.
Thank you for that. I think when it comes to finance, people can probably ask questions forever, so I'm just going to go through a few of them. This one is probably something that you've also come across. How would you advise one saves for an emergency fund? Because we all want one, but is there a way that maybe one can go about saving? How much should we be putting there?
Yeah. So I think exactly as we spoke about earlier, the emergency fund is something that you should save in a savings vehicle that's very available. So it's something that's not locked away for a long time, where you can put money into it but access it very quickly and easily. And there are plenty of investment vehicles that allow you to do that. So the options are available. There are also options for people who can't do it every single month. So if you'd like to save as and when you have money available, there are options that allow you to be flexible in that way as well.
If you were going to give someone advice and you said, this is the one tip that I'm going to give someone when it comes to financial well-being, and I'm going to ask both of you as well, but we'll start here. What's the one tip that you would give someone?
Start today and don't take out debt for monthly expenses. So don't take out debt to go party with your friends or buy groceries or buy clothes. That's very important. Use debt to service big things and good things, but not for those.
Sure. And Brett?
Well, it's going to be personal to me and what I do, but I'd encourage everybody to join our All Mutual Rewards program. And we've got such fantastic stories to tell about it. The customers who've joined our rewards program, they've engaged with the financial education. They've got great insight about their finances. As a result of that insight, they've said, I actually need to put some solutions in place. They've spoken to financial advisors, and along the way, they've got to the top tier on our Mutual Rewards program. They're very comfortable with their financial position. One of the great stories was somebody who worked in our call center who started out like this. And she was saving up and building up also her savings in her rewards account. She then disinvested her rewards points and use them to buy her textbooks for the degree that she was starting to study. So I think
That's a
you
great
can leverage
story.
these rewards programs in so many creative ways. So because ours helps with this whole journey, I think it's a good place to start as well. Engage, do stuff about your finances, learn about them, and let us help you on the journey.
So, as a young person who recently got a financial advisor and has had a financial awakening, I would say get a financial planner or a financial advisor. I think that there were so many things that I wasn't aware of before I sat down with my financial advisor. And now that it's been open to my eyes, all of these different things, I think more than anything else, it's empowering. And now I just want to go out and tell everybody to literally do it. And I genuinely have been. All of my colleagues,
Yeah.
they know. I've been telling them, get one. So I definitely think that's it. And Old Mutual can help you with that. So, hey.
Now, before we wrap up, Britt, I just want to ask, what are some practical tips on how to change spending and saving habits?
Sure, this is a tough one. I think, to borrow Priya's example,
Maybe we can just do
choose
one.
that category that you want to save on and focus on it. So for me, it's about buying coffees. Know how many coffees I want to buy a week and stick to that budget.
And Priya, how do we prepare financially to avoid being left vulnerable should any future pandemics or incidents happen? I mean, probably being a bit unfair to give you such a short time to answer, but maybe you can just give us the tip of the iceberg.
Yeah. So the pandemic actually highlighted something that's been happening with illness for a long time. It's, we know that people are living longer. We know that there are medical advancements. And what we saw with the pandemic was if you had the right access to resources and healthcare, most times you'd come out strong. So I think with resources, your chances at coming through a pandemic, an illness, any other type of difficult life situation is much more positive. So I would absolutely encourage people to, I want to say get a financial advisor, but really the trigger to that is to get personal with your money. It's about wanting to have
with your money.
Yeah, it's really about wanting to have a relationship with your money, and a financial advisor helps you do that. And exactly as Aneli said, it is so empowering when you have a handle on who you are, what you want to achieve, and how your money is working for you, versus you kind of just being pulled in different directions based on what advertising is out, at that moment in time.
Sure, you've had a lot of, buzzwords coming out today. When's the book coming? Well, unfortunately, we're out of time, which is why I had to give you a short segment to be able to answer such a big question. That's that. A big thank you once again to our partner, Old Mutual, our great panel. Thank you, everyone. And Britt flew all the way up here, so thank you for making that flight. And of course, to you at home. The winners of the Old Mutual competition will be announced over the next few days, so keep your eye out for that. And as usual, we love having you join us, and we always appreciate your support. I hope tonight was as informative and inspiring as it has been for me personally. I definitely feel better informed about some of the ways I can better create a financial legacy, and I hope you do too. Keep well, be safe, nisale kahle, and good night.